It's amazing how the concerns have turned on a dime in terms of before it used to be the concerns that the factory wouldn't be able to ramp up to meet demand, and now there are real concerns about demand itself. What are you seeing that convinces you to stick with your buy rating?
Well, I think there's a couple of things to point out here. For starters, I note that this conversation very quickly turned into a referendum on Elon. I've said before that I think his management style and his way of communicating is a problem. I'll say I agree with one point that Phil made. It's all about volume, okay? But we do a lot of work, and I know other people do, Adam does, and we've got a good look now at what April looked like. It wasn't that far off of March in terms of volume for Model 3 cars, and typically the quarter's back-end loaded. So to be honest, at this point, I know sentiment is down, and I do think it's fair for maybe the multiple to compress, but it's a little hard for me to see how they don't ship 90,000 units in the second quarter if you really take a hard look at what's going on out there.
Talking to the multiple, with your $369 price target, that's a 57 multiple for Tesla. That seems pretty lofty given the demand concerns we're talking about, even if they can hit those numbers that you're saying. What do you think is a more realistic figure?
Well, remember, I valued this company in 2020, and I think you have to because they're growing into their operating costs. People like to make the point that it's valued expensively for an auto company, but most auto companies grow at 1 or 2%. This company grows at 15%. So what I've said is it should be on a 15 multiple of EBITDA for next year, discounted back at actually a pretty high. I'm applying a pretty high risk multiple to that number. So I think I'm still being pretty reasonable, but it's a high growth company, and when people get worried about high growth companies, the multiple gets cut, and that's what's going on today.
And certainly the market environment overall is not favorable to these sorts of companies, Joe. At the same time, are we at a point, though, where the Tesla stock performance is really going to bear its brunt on how the company operates? I mean, if you take a look at the bonds, the 2025 bonds set new lows after that last capital raise. Should we be concerned that this is sort of a never-ending cycle of the stock keeps going down, the bonds act very poorly, and it just creates a vicious sort of vortex for Tesla?
Well, two points, if I may. First, remember that they just raised $2.4 billion. Go talk to any converts person, and they will tell you that they could refinance the next convert that's coming due. So I don't think there's a question out there about this company being able to raise money. The second point, if I may, a friend of mine once said the analysis sets you free. I do the work on this company. I look at the volumes. I analyze the cash flow. If it makes sense, I buy the stock. And I try not to get too rattled by what the stock's doing on any particular day. I've been at this game for almost 30 years, and I've learned that, especially in times like this, you've really got to stick to the fundamentals. I see a company that can ship 90,000 units in the second quarter, and if that happens, the stock's going back up.